Good morning, everyone. This is Shalon Powell, founder and CEO at Carbon Traders Institute. I want to start off the presentation by saying thank you guys very much for watching my live videos. Now, this morning presentation is just a continue from the previous webinar we had, where we placed 2 trades, matter of fact 4 trades with the same currency. We sold the euro and we bought the Swiss franc, right? Now guys, on our website we're going to have 4 live videos for the month of January where we're placing live trades, okay? Now, our series of recorded presentation is not to turn into a trader, but just to show you what to expect from the global market once you learn how to trade through Caribbean Traders Institute with me, Shalon Powell, being your coach. Now guys, let's get started. We bought the Swiss franc last week. Let me check the date here for you. Alright. We bought the Swiss franc on the 2nd of the 1st, okay, at 11:15. Then we enter another trade on the 3rd at 3:19, okay? So basically, we traded on the 2nd and on the 3rd. Today is the 7th, guys, which is 1, 2, 3, 3 days after. 3 days we're in this trade, guys, okay? And currently, we're up $320 on the first trade placed on the 2nd. The second trade on the 3rd, we're up $203.95. This is the Swiss franc chart, guys. I want you guys to take 1 minute, okay? 1 minute. Grab a piece of paper, get your pen, and I want you guys to write this down. Alright? Today's the 7th of the 1st, 12:35 a.m. and we're going to do a series of videos, live trade in the market. Now, I don't want any one of you guys to be thinking you have to be up this time to trade, That's not the goal. That's not the purpose of trading. I'm recording different market sessions so you understand that this is a global market based on the schedule that suits you best. Me, the trader, will know whether or not if it's a good time to trade or if it's not a good time to trade, and I will advise you accordingly. But remember guys, CTI trading methodology are reversals. We enter in the market when it's about to move. That way we have less risk in the market and we could hold a trade longer and capitalize on the trend overall, okay? Before I go to my euro trades that were closed, I'm just going to touch base here, guys, on the gold. I traded gold on the 3rd at 217. Matter of fact, yes, 217, right? And I also trade silver 217, and I bought the Canadian, right? Currently we're up $146 on gold. We're up 150, 165, roughly. It's fluctuating, as you guys could see. It's live market. With silver, we're up $3 on the Canadian. The goal, guys, is to explain what we did, alright? As I said to you before, these are a series of live presentations, and we're going to mix the fundamental with the technical. And I want you guys to take notes of my trades, so when I post the monthly statement on the website, you're able to view it in detail and track to see it for yourself. All right, now let's get started in the live market. As I said to you before, the Swiss franc all-time high last year at 0.9967. Let me delete that. I'm going to draw it again. Okay, horizontal line. $0.9967. Okay, this was the high point for last year. To keep it simple, the bottom of the chart here shows you the month and the date, and to the right vertical scale it shows you the price. That is how you're able to track how a currency been moving or performing in a given time period. Now, to have an idea what we're going to do, I'm going to redraw our trend line. All of this will be explained in our course, but as I said to you before, this demonstration is not to turn into a trader, but just to give you an idea what to expect. So now, remember from my last presentation, guys, if this is your first time watching this video, I urge you, go back to the last webinar. My previous limit, a limit is somewhere where you want to come out the market for your profit, right? That's what's called a limit. It means take me out the market for my profit, all right? Where you guys see these two green lines, you see right here, buy. This is where we enter buy, okay? We bought the Swiss franc last week, as you could see down here. You will see the date, okay? And where you see price, 91.68, 92.04. You realize we have our stop loss here, and we have our take profit, okay, at 93.75. Our take profit last week, guys, was at 9,300. Go back to the last video, you'll realize that I predicted before the market rally that it was going to go to 93. Now, after I did some further analysis with non-farm payroll and Ben Bernanke statement came out on Thursday, I realized that the market going to go higher. So I extended my profit take for the Swiss franc right at this red line to come out at 93.74. So I know the market going to rally to 93.74. But guess what, guys? Market goes up, market goes down. So as a trader, you have to be mindful, locking in profits while the market going in your trend. So market rally bounces on the trend line right here, which means this is telling me, the trader, that hey, I'm going to go higher, but before I go higher, I will retrace, come down before I go back up. So you know what, guys? I'm going to close out my Swiss franc trades. Bounces on the trend line. We got a bearish candlestick. We're on a daily chart. We got a bearish candlestick. I'm going to turn to a smaller time frame just to have an idea. Right. Now we got an evening star. I know this is new to you guys. Don't worry. Everything is explained in our course. We got an evening star right here. The market start to retrace. So it's either two things. The market will come high and test the trend line, then pull back down, or it will retrace, come down, and then go back, which means anyway it's going to go higher. So this is what we're going to do. we're going to close out our Swiss franc trades, and then we're going to add up the Swiss franc and the euro trades before we touch gold and silver. So it's very simple, guys. Once you're up on a trade, you highlight the currency, as in the position. You have your order kit number here that you could use to track the trade. Okay, so I'm going to go ahead. We're up 317 US dollar on that trade. I'm going to go ahead, close order. The broker is asking if I want to close my trades. I'm going to tell him yes. Instantly, my first trade is out. Now, remember, guys, right where you see this green line, I'm in one more position buying. So I'm going to go ahead and lock in my 197 US dollar trade. Green line. Perfect. Now, we're not in any trade whatsoever when it comes to the Swiss franc. Let's come over to account history. Right, let's look on the time. So we bought at 11:15 on the 2nd. We also bought another trade with the same currency, 3:19 on the 3rd. And guess what, guys? We got out this morning. Right. We got out this morning. It's 12:44 Trinidad time, which is 11:44 US time. So they're 1 hour behind. So this time is still coordinating with Trinidad. So we closed out our trades. We locked in 317 US dollar from the 2nd to the 7th. Okay, today, the 7th. And our second trade, we made 194 US dollar. So give or take, let's come here to our calendar from the 2nd. So it's 1, 2, 3 trading days, 4, roughly 5 trading days, guys. 5 trading days, we made 1,111 US dollars and 63 cents. Entering the market on reversals. Okay, now let's look at the euro. Do you realize that you're seeing two green colors here? Right, that's simply telling us that the market takes us out the trade automatically at our exact price where we're looking to come out at, which is 1.3075. So the euro rallied to 1.3075. I want you guys to write that down. Sorry, not rallied, dropped. We sold the euro, my apologies. We sold the euro at 1.3197 and the market fell. Right. In other words, to gain on a currency that is losing value, you need to click sell first. So you expect the market to go down. That's why we enter selling the euro twice. I'm going to give you guys just a couple minutes here to look at the trades, the close trades. We bought the Swiss franc twice. We sold the euro twice. We sold the euro twice. Now, guys, let me grab my calculator. We enter selling the euro at 1.3197. Okay, 3197 is all the way up to the top here. That is where we sold the euro, 1.3197, somewhere above here. And we got out at 3075, which is somewhere around here. But yet still the market went to as low as 1.2992. So the market dropped an additional 70 pips, guys, after it take us out the trade. Remember, we set the trade and we forget it. You are a swing trader. You enter at reversals in order to capitalize on market swings. That way, you have less risk in the market and you don't need to sit down at your monitor and watch it 24/7. I'm doing this thing for 6 years now, so I know exactly the right time to trade, which currency to trade, and the risk you should put on the trade. So whenever you're out the trade, don't re-enter back. Whatever you make, that is what you need to use and build your investment. Eat little to live longer. Now guys, we made $1,111 US. We're going to divide that by the deposit, which is 3,000. 0.37%. We're going to multiply that by 100. We're up 37% for the month so far using our methodology. Okay? 37% using our methodology. Let's take the percentages out the picture, guys, because as I said to you before, you are a swing trader. Once you're a swing trader, anything is possible. All you want is just to spot the opportunity, know when to get in and why, and know where to get out and why. Once you can figure that out based on your trading style, then know you could invest according to your risk appetite. Perfect. So 1,111 US multiplied by 6.25, that's $6,943. What you need to do, whether you're from Jamaica, Turks and Caicos, Barbados, Bahamas, New York, let's use the Caribbean. Multiply the US currency to your home country's currency. And that is what we made in that given time period. And we're still in gold, we're still in silver, we're still in the Canadian, which I'm going to close out the gold and the silver trade and only leave the Canadian. But before I do so, I'm going to turn to the gold market. Right. For those of you who didn't know, Japan is the number one country that has the most gold reserve. The best time to trade gold usually be early London session to the beginning of Wall Street. Asia usually be quiet, but sometimes you could use the Asian session to gauge whether or not if you should cash out a trade or hold the trades. Now, we're not here to try capitalize on 100% price swings. And let me explain that. We did expect gold to drop. We're focusing on the technical analysis, right? We sold gold at 1664, right? Turn to my smaller time frame. Right. We sold gold right at this evening star. 1664. Right here. Right where you see this blue line is where we sold gold. 1664. I want you guys to write that down. 1664. And it fell all the way down to 1624. So this is how you calculate gold. 64 minus 24. Okay? $64 minus 24. That's $40 gold drop, guys. $40 gold drop, guys. We were getting 3 cents a pip. Okay? Now, all we need to do is multiply 40 by 0.3. At one point, we were up $1,200 US on this trade, basically. Right now, we're up 168. You see swap, that simply tells us that we roll over into several sessions, as in London. We place the trade, as you could see here, on the 3rd. Guys, as I said before, listen carefully what I'm saying. We place the trades on the 3rd. Today is the 7th. So we're going to go ahead and close these trades. The gold market, we expect gold to continue to go lower. And I'm going to explain the fundamental analysis, right? Technically speaking, gold is going to come down 1591. Gold is coming down where you see this red line. We sold at the blue and our stop loss is at the red. So we're going to come out our trade right now. As you could see, we were up. As in, I think this was Friday after non-farm payroll, the market turned around. So we're going to go ahead and close these trades. That's what, from 3, that's roughly 4 days. 4 days of trading, not bad. Let's close out the trade. Let's go ahead. Yes. Do you want to close your order? Yes, we like to close our order. Okay. Perfect. There you go. Right. Now our balance has moved from 4,000 to 4,200. Now we're going to go ahead, turn to the silver market. Silver and gold has a 100% positive correlation. I'm trying to keep my composure calm, guys, due to the fact that all trades, every single one of our trades are successful. Every single one. Ask yourself, what type of trader, probability wise, am I? I will be your coach, holding your hand, coaching you, questioning you. If you want to buy, why are you going to buy? You want to sell, why are you going to sell? Now, we expect silver to go lower as well, just like gold. Reason being, silver trend since July 12 has been going up, and since December, with the whole fiscal cliff issue, the market depreciating value, came back up after Obama passed the deal, and then Wall Street traders sell it off, along with Ben Bernanke thinking about not pursuing quantitative easing anymore. We expect the silver market to go lower Our goal is to eat little and live longer. You're never too big to fail. So whenever you're up overall, take it and go. On the 3rd, I placed this trade. On the 3rd. Today's the 7th. I'm not going to come back to my chart and calculate how much I could have made and get emotional saying, oh, I sold silver at $30.39. However, it went to as low as $29.11. No. It don't make sense you try to affect your psyche. The bottom line is, the end of the day, this. Profit. You're a trader. You trade for profit. So we're going to go ahead. We're going to close this silver trade. Broker is asking us if we want to close. We're going to go ahead and click yes. Right. Now we're out the silver. We're still in the Canadian. We're going to leave that Canadian trade. Matter of fact, let me open up the chart for the Canadian. This might look a little confusing to some of you. Not to worry. Alright, we're going to go ahead and leave the Canadian trade for now. We have a tight stop loss, so we could work with that. Our stop loss is at 98.20. We bought at 98.72, just 35 pips right there. So we'll leave that for now. We're looking to come out at 1.0053, which is way at the top. So let's leave that for now. Right, let's come over to the pound yen. I'm going to go ahead here, guys, and change around this a little bit more so you could understand. Right, much better. Over here. Right. Okay. This is the pound yen. The yen has been rallying since November the 6th, guys. Rallying, just rallying, just rallying. It's been getting some signs here that it wants to U-turn. When I mean signs, I'm going to come here. Okay. Market now breach an important point, which is at 1.4004. Okay, now we're going to come to a smaller time frame. All of this you'll understand, guys. We're going to come to a daily time frame, and we realize we're getting some exhausted candles here, even though the market breached the 1.40 barrier. It's still a little bit exhausted. We're going to come to a smaller time frame now, which is a 4-hour chart. Okay, I know you guys are new. It's perfect if you guys don't understand, because what the point is explain it to you if you do. So we're going to go ahead here, guys, and in the presentation, we're going to go ahead and place the trade. We're going to go ahead and sell the pound yen. So the broker is asking us if we want to sell it at 141.03. If we sell the pound yen, we expect it to drop in order to gain. So I'm going to go ahead and click sell. Perfect. Now I'm active in the pound yen trade. You realize? Okay, perfect now, guys. So the time changed to the 7th because we're now in the United States. They're 1 hour behind. So it's now 12 o'clock their time, which is 1 o'clock our time. Right. So we sold the pound yen at 141.01. Right? 141.01. So we're going to calculate our stop loss if the market goes against us. So I'm going to see how much risk am I willing to put on this trade. So if I sold it at 141.01, I'm going to put a 55 pip stop. So I want to come out at 141.56. 141.56. Right, 55 pips. I'm going to go ahead and click perfect. So right where you see this red line, if the market come up here, we're out the trade with a loss. So all we need to do is multiply 55 by 3. That's what we lose if the market go against us. Right? So let's calculate our rewards now. We're looking to come out anywhere down to the past support, right? Which is currently at 140.04, which is roughly 100 pips. So we're risking 50 to go for 100. Not bad. Okay? Right. Right. So I could go ahead and delete this black line now. So we're expecting the pound yen to depreciate in value, which we're getting some exhausted candles so far. We're breaking even on the trade any minute now. So we expect the market to go lower in order to gain. So our risk to reward, we're risking 55 pips. Our entry price, I want you guys to write this down. Our entry price is 141.01. We're risking 141.56. Our profit take is 140 flat. So I'm going to leave that for now. Let the market do what it's doing. And then we're going to go to the fundamental. But before I go to the fundamental, guys, let me show you something, a secret. Since we're in the Asian session, it's daylight in Asia. So you know that Asia, they're using the yen to transact the business. So the yen is active around this time. So when London opens at 4, it will continue the trend based on where it's going currently. Alright? So I'm going to go ahead now and turn to the fundamentals. This article was published January the 3rd, okay, at 3:51 p.m. January the 3rd, 3:51 p.m. Gold extends drop as dollar gains after Fed QE3 signal. Guys, Federal Reserve Chairman Ben Bernanke came out last week along with his members saying that they're thinking of easing, as in like stop to do monetary policy to print money for the US economy basically. In other words, gold price reacted and it depreciated in value. With the charts telling us to sell, we went ahead with the trade since Thursday. And Friday now, the market continued to drop, and today is when we close out the trade. So even though we didn't capitalize on the whole trades, we're still able to reflect positive on our account, which is the goal. Our goal is to show you that the education works. We're not trying to pitch any get-rich-quick program. We're not trying to pitch that the market is unreal. What we're letting you know is that the market is real. Once you're determined, you're able to listen, you're disciplined, and you go the extra mile to achieve your goals, well, this market is for you. Now, guys, I'm going to come to the end of my presentation. We're in the Canadian and we're in the pound yen. Expect this statement to be uploaded before the month is out of January. We're up 1,400 US dollar for the month so far, profit 1,412 for the month so far, profit. And what we're going to do, we recorded one presentation already in the London market. We're in the Asia session now. So before the month is out, we have to do the US, and then we're going to go over again. Bottom line, we still have the Standard & Poor's index to trade. We still have the Dow Jones to trade. We have crude oil. We could touch that depending on how the market set up. And the euro and the Swiss franc will give us another trade. So in other words, you guys could expect 2 more live videos recorded and posted on our website. On behalf of the team at Caribbean Traders Institute and myself, Sheldon Powell, your coach, I'd like to thank you guys for taking the time and listen to our online presentation demo. Thank you. You guys could go ahead now and register for our live, free, interactive webinar. Take care.